Hi, everyone. Welcome to the latest Carson's Take 5. Ryan Detrick here. Sonu's on a well-deserved vacation, a break, if you will, over in India. So you get just me this week. But we're going to talk about 5 reasons to be thankful. Obviously, it's Thanksgiving week. By the time most people listen to this, we hope you've probably, I guess, by the time you've heard it, you've probably already had Thanksgiving, actually. But hope you've had an awesome Thanksgiving week, ate a lot of good food, had some fun with family and friends. And there really is a lot to be thankful for. And that's what we're going to touch on again this week in the latest Take 5 as we look at 5 reasons to be thankful. Reason number 1, this is still a bull market. Stocks are up over 20% 2 years in a row. What's really nice about what we're seeing lately, it's broadening out. What does that mean? You might have heard last year, Soda and I talked about this a lot. Only certain groups were going up a lot last year, specifically technology. When you look at this year, right, there's 11 S&P 500 sectors. All 11 up on the year. 10 out of 11 up at least double digits on the year. We are seeing a broadening out of this bull market, and that is something to be thankful for. The second thing to be thankful for, the year is not over, let's be clear, but we're on pace potentially for the S&P to be up 20% again this year. Remember, it was up over 20% last year. So 2 years in a row up 20%. That is something probably to be thankful for. But what does it mean for the future, right? What about the future? I mean, could trouble be coming? That's what some of the bears are telling us. We took a look. We found 8 other times that you saw back-to-back 20% gains. The next year was higher 6 out of 8 times. So, pretty good win rate. The average return that year after back-to-back 20% gains, over 12% on average. So better than your average year. So I guess we'll just put it like this. The strength we're seeing is a bull market. We're going to talk about the economy and some other things that still suggest we're in a bull market. The fact we just had, or we're looking at back-to-back 20% gains, after this year is all said and done, is not a reason to be bearish. History would say you still could have some better than average returns. Let's be clear. We don't expect a 20% gain next year. We wouldn't complain if it happened. That's not our base case, though. But I will say in the mid to late 90s, there was a record 5 consecutive years, 95, 96, 97, 98, 99, if I did that right, that all saw over a 20% gain. Again, not predicting that. We're just saying, sometimes these things can happen. And again, more gains are likely as we still think we're in a bull market. The third one I wanted to talk about, the third reason to be thankful, inflation. Right? Sona and I have talked a lot about inflation coming back. Let's be very clear. We get it, right? If you look at prices 3 or 4 years ago, they are higher than they were. In fact, much higher in a lot of cases. But what the market looks at, what we're focusing on are like month-over-month change, year-over-year change. In a lot of ways, we are back to pre-COVID levels, so inflation has really come back. Here's another one to be thankful for. Make sure I read this correctly. I'm going to read it word for word. The American Farm Bureau Federation, kind of a mouthful, they look at the average price of Thanksgiving dinner for a family of 10. Down 5% from the previous year. Something to think about there. The price of stuffing, the price of turkey, it will come down. The rolls, though, are a little bit more expensive. And I don't know about you guys. I'm a big fan of the Thanksgiving dinner roll. But the reality, again, is we are seeing some improvements on inflation. That is something to be thankful for. The economy remains strong. We say there's kind of lots of ways to look at the economy, okay? But earnings, if the economy is strong, earnings are likely going to be strong. We are looking at record earnings in the S&P 500 right now and expected record earnings next year. Okay, that's the fourth reason to be thankful. The economy is still strong. And again, with earnings really strong, the other side of this is profit margins. Profit margins just hit not an all-time high, hit their highest level this cycle. So you have profit margins strong, you have earnings strong. That is a backdrop usually of a pretty darn strong economy, and that's another reason to be thankful. The fifth and final reason to be thankful right now, believe me, there are a lot more reasons, but we're only listing 5 right now. The Fed, right? The Fed, let's keep this fairly simple. In 2022, the Fed hiked rates aggressively to slow down the economy, to slow down inflation. That caused a lot of problems. Well, the Fed hasn't hiked interest rates in a very long time, since summer 23, and now they're actually cutting. We continue to think the Fed can cut this year and even into next year. As again, inflation is not a problem. Historically, when the Fed is cutting interest rates, that can be a positive thing to unlocking animal spirits, to unlocking business investment from small businesses, and honestly, to help the housing market. Looked around the housing market lately, that's an issue with our economy. Parts of our economy are really strong, but housing and small business is not all that strong. Small business investment, not all that strong, I should say. And with some more Fed cuts coming next year, we think that is another reason to be thankful this year. So with all that, everyone, again, we hope you had an awesome Thanksgiving. We love doing these. Sonu should be back next week. If you didn't like me flying solo, he'll be back to fix it all. But listen, we really appreciate you watching these. We'll see you next time. Thank you. Take care.